When you're getting a mortgage on your property, an appraisal is a big piece of getting to closing. Typically, if you're putting less than 20% down, sometimes even as much as 50% down, you will still need an appraisal. Your lender will order this through their appraisal panel. The lender does not get to choose exactly who their appraiser is, and typically they don't get to talk directly to the appraiser. This was all changed during Dodd-Frank after the 2008 crisis. The lender orders an appraisal. The appraiser goes out and performs a third-party evaluation of the property. They look at the condition of the home, the fits, the finishes, bedrooms, bathrooms, square footage, and then they compare it to comps in the neighborhood. Your realtor likely compared the home to comps in the neighborhood when they helped you determine the price in which you were going to buy the house. If you were in competition, you may have had to bid the house up in price. If you weren't in competition, you might be getting it for list price or lower, and you were checking out comps to make sure it all aligned. The appraiser uses a much more scientific and mathematical equation to come up with value. They are highly trained, they have college degrees, and 2,500 hours of apprenticeship. So they are considered the experts by the bank, and it makes the bank feel secure in their investment. If the appraisal comes in at the value you agreed upon with the seller, great. Nothing has to happen. The bank will lend to you as you expect, and you bring your normal down payment. If the appraisal comes in above the value you agreed upon, even better, you have automatic equity in the property. You don't get to borrow against that value. You can borrow against the value we agreed upon, just knowing that you have more equity than you are even putting in. For instance, if a property was bid in at $400,000 and you get an appraisal that says it's worth $450,000, you have $50,000 in equity beyond your down payment. That is great news. That means you got a deal on the property. Now, every once in a while, we get the reverse situation where the appraisal comes in below the value that we've agreed upon. Let's take that same $400,000 property, and unfortunately the appraisal came in at $375,000, meaning that they can't find comps in the area to support the value that we agreed upon. Depending on how you wrote the purchase agreement, presuming you left your financing contingency in place and that you get to have it contingent on an appraisal, you can do a few things. You can move forward with the price you agreed upon, and then you would have to make up the difference in cash. So sometimes that means just reducing your debt to purchase price, right? So you might have been putting 20% down. You might now only be putting 12 or 15% down because you have to make up that cash difference in down payment. Sometimes you're putting a very low down payment down and you truly have to bring cash to the table. More commonly, if the financing contingency is in place and there's not a ton of competition at the table, you are negotiating with the seller. They might say, hey, we'll come down to this price and you'll come up to this price, making up the cash or down payment difference, and we agreed on the new price there. You could also bring the purchase price down to the appraised price if there's no other competition or if you have no way of bridging the gap. Also, the last resort is sort of that you would cancel the purchase agreement, saying, I can't get financing on this property based on the price we agreed to. You won't come down in price, and so we need to cancel. Assuming you had your financing contingency in place, you would get your earnest money back in that situation. Most commonly, we have motivated buyers and sellers, and so we typically find a middle ground where everybody can feel comfortable moving forward. It is critical when you are looking at appraisals, as well as crafting your offer, that you have great agents who understand your market, know the comps in the area, and can help you determine value to avoid putting yourself in a bad situation. Additionally, they may know that you are heading into a potential appraisal issue. The biggest thing is that you want to make sure your agent has communicated that with you. Have you asked the question, do we risk an appraisal issue here? The agent should give you clear information and be very transparent about any possibility of an appraisal issue to ensure that you craft your purchase agreement in a way that protects you should that exist. Or at a minimum, that you are choosing non-protection knowing that fact. Appraisals are a very normal part of the process. Getting through them is just a step towards closing. Find a group like ours who can help guide you through this process and make sure that your offer and terms are representative of what you need in order to move past the appraisal and get to closing.